Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. There's lots of awesome real estate in the world, and today we're going to talk about a particular market or two that makes some sense given everything going on, and the bigger picture of finding, vetting, and staying current on a market. And we've got a great guest today on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. I know last week we said you'd hear part 2 of the Investors Summit on Sand. We're going to push that off a couple of weeks because we got some great interviews we want to get out. Joining me as usual, co-host financial strategist Russell Gray.
Hey, Robert.
It is a big, beautiful, real estate-filled world, and we love to get out in it. It's been a crazy summer of travel. You've been on the road. I've been on the road. We've been in a few places together, but lots of places separately, and it's not stopping. The next several weeks, we are traveling and traversing the globe, and I think in many ways, that's how you get exposure to new ideas, new people, and new real estate markets. Markets you can learn from afar. There's great services that you can subscribe to. You can Google around and so forth. But at some point, you got to get down and, as we say, kick the dirt and see what's going on in the market. Certain things you can find out anecdotally. Certain things you can find out from the numbers and charts and graphs and statistics. But there's a lot about a market that you need to be there to see it and feel it and really understand it.
I think the thing is that a lot of folks maybe don't recognize until you get out there and start doing it is that even markets have personalities. And so if you're going to build a relationship with a person, you're going to have to spend time with them. And you can do it over media, I suppose. Obviously, we have a relationship with our listeners. They listen to us, and I know that there's people I follow, and I listen to them, and I feel like I know them. But it's a lot different for me spending time eating dinner or having a conversation with George Gammon versus watching him on his YouTube channel. When he comes on the summit, I get a chance to get to know him. Chris Martenson, Kenny McElroy, I mean, the list goes on and on. We're big believers in live events for building personal relationships and traveling. But markets are that way too. So to your point, when you look at a market, you can look at the stats like an appraiser. You look at everything that happened in the past, and that's interesting. So you know what happened in the past. But in order to extrapolate into the future, you have to know what's going on right now. And some of that is just getting into conversations with people, what we call the boots on the ground team, property managers that can tell you exactly who's applying and what they look like and how interested they are and how long the line is, where they're coming from. So many little pieces of anecdotal information you don't capture just in statistics. But the other part is just understanding how a community feels about itself, the condition of its infrastructure, the way people take care of their cars or their neighborhood, how many for sale signs are up, how desperate things are, how many homeless people you see, graffiti. There's just 1,000 little signs when we go into a marketplace that we start looking for. And if you travel around and look at different marketplaces, it doesn't take you long to figure out that markets really do have personalities. And right now, maybe more than ever, with remote working and the lessons learned in COVID, people are really open to the idea of relocating. Financial pressure is creating it, opportunity is creating it, and the way the world is working, making it easier for working class people to move around. They're doing this too. And so as an investor, you want to get your thumb on the pulse and your feet on the ground in a marketplace, and then also spend time with team or potential team members and really get to know them.
For more than 20 years, I've said live where you want to live and invest where the numbers make sense. You don't have to buy property, rental property in the same place you choose to live. Some people do. But here's the thing. The great news is all markets are not created equally. And with a little bit of homework and a little bit of relationship building, you'll be able to exploit some awesome opportunity in real estate. Take tenant-landlord law, for example. It's different in different places. There are some states in the United States, for example, that are very tenant-friendly. If there's ever a dispute, they're going to err on the side of the tenant, while there's other states that are a lot more landlord-friendly. If I'm going to be a tenant, I probably want to be in one of those tenant-friendly states. If I'm going to buy property and be a landlord, I'm probably better off in a landlord-friendly state. And there's a lot of examples like that. There's a ton to take into consideration when you're picking a market, but we're out looking at a lot of them. And part of our job is to report back to you. Today, we're going to talk about one of our favorite markets, and that is the state of Florida. Now, that's a big, big market. It's actually made up of, as you can tell, from several different markets. There's the whole Miami, Fort Lauderdale market. There's Palm Beach, and there's Palm Coast, different than that. And there's a Space Coast, different than that. There's Orlando. There's a big driver of a market. There's Jacksonville, one of our favorite, maybe lesser known spots. There's Ocala, the horse capital of the world. I mean, there's so many places that you can go in Florida. But overall, what we like is that more people are moving into Florida than are leaving in huge numbers. Rents are on the rise, and it is a very landlord-friendly state. And when we come back, you'll meet our good friend Chris Funk. He builds to rent, and he also manages lots of properties. So we'll learn about the market from a couple of different perspectives. It's going to be a great show today on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
The Real Estate Guys are throwing a party, and you're invited. Join us live at the New Orleans Investment Conference, October 12th through 15th. Now in its 48th year, it's the nation's longest-running investment conference and features some of the biggest names in economics and investing, including Jim Rickards, Danielle DiMartino Booth, Rick Rule, Doug Casey, James Grant, and George Gammon. And of course, the Real Estate Guys are speaking again this year. Plus, we're hosting an awesome party one of the evenings with some very special guests. So make plans today to join the Real Estate Guys at the New Orleans Investment Conference. With all that's going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. That's neworleans@realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
Hello, this is Robert Kiyosaki. I'm the author of Rich Dad, Poor Dad. And if you're serious about learning how to invest in real estate, listen to the Real Estate Guys. They really know what they're talking about.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show now in our 26th year of broadcast. You'd think we'd run out of things to talk about, but there are too many awesome spots in the U.S. and beyond to talk about. And this week we're talking about one of our favorite places, sunny and beautiful Florida. Let's welcome back our good friend, Mr. Chris Funk. Hey, Chris.
Hello, sir. How are you?
I'm good. How are you doing?
Great, thank you.
Well, we're anxious to hear what's going on in your markets. You have a variety of places where you guys property management as well as new construction in sunny Florida. What's going on in your market?
Well, outside of interest rates that are going crazy everywhere, our market in general is also still going crazy. You know, we're still seeing a major influx of folks coming to all markets in Florida. You know, we're primarily Jacksonville, Palm Coast, Ocala, Cape Coral, Port Charlotte, Punta Gorda, those markets, and still heavy inflow traffic from out of state. It's been pretty wild to see the amount of out of state applications that we're getting. and really some great income coming along with them. That's is actually bringing up the overall income, household income in a lot of these areas. So we've been super blessed with that. I'll say the interest rates have been scary for all of us, and we'll talk a little bit about that more, I'm sure. But one of the things that we've seen is it's driven a lot more people from buying into renting, which has been nice. People used to with 3% interest rates, they could get a $600,000 house, and with 6% interest rates, they can get a $400,000 house. And a lot of the houses that we build to rent are a heck of a lot nicer than the houses they're selling for 400,000 from a retail home builder perspective. So, we see a lot of people just making that decision. Hey, I'd rather live in a really nice rental house than a downgraded for sale house. So we're seeing really an uptick from both population and people just switching more to renting.
So, Chris, a couple of great paradigm breakers in there. I want to make sure nobody glossed over this, because this is great stuff. The first is you hear about markets where people are leaving, and that's, leaving the market in disarray and folks can't sell their homes. Well, there's this concept that we talk about called net in-migration. When every market, every day, people are leaving, people are coming in. When the net result of that is that more people are moving in than out, that's good. That's your market. More people moving in than out. Secondly, interest rates. You hear interest rates are high. It's like, well, that's bad, right? We don't want high interest rates as real estate investors. Well, when we want to buy a property to rent out, yeah, sure, we'd like to have the lowest mortgage rate possible, and we're all seeing the rates inch up. But at the same time, your point is key. The folks that might be first-time buyers or early in their career buyers are priced out of the kind of house they'd like to live in, so they decide to rent. And we've seen rent growth just like we've seen interest rate growth.
Exactly. And I think in addition to the rent growth, what we've seen, which has been great, because we've had material cost increases, the cost of housing has just gone up in general, but the rent growth has outpaced that in many of our markets. So it's really been a helpful change there. But also, we've seen some very interesting new finance products come into the market to help offset some of these higher interest rates. And actually, you all introduced me to one, at one of your conferences. So, thank you for that. We've been working with them quite a bit, but so we're starting to use some of these interest-only products to give a little bit better cash flow here during these high interest rate times. Because I think we're probably like most people. I don't know when the interest rates are going to come back down, but at some point the Fed is going to decide that they've put the brakes on hard enough, and I think they're going to reduce rates. So, from a real estate investor standpoint right now, we're looking at these interest-only loans to really boost up our cash flow with the idea that, we're going to refinance out of these here in, 2-3 years, whenever the interest rates come back down in line. I don't know that we'll ever get back to 3%, but, 4 or 5, somewhere around there. Certainly then it's time to refinance back into a 30-year loan.
It's one of the strong reasons for investing in single family. A lot of folks, they get a few single family houses and they get all enamored of investing in apartments. Nothing wrong with that. Apartments are awesome. But the challenge is when you get an apartment loan, you're typically stuck with it for maybe 10 years. And to pay it off early or refinance it would cost a fortune. In the single family space, that's just not the case. 1 to 4 units you can refinance pretty easily. And I think that's the way to approach it, right? We negotiate the price of the house one time, but we can negotiate the financing as many times as need be. And certainly people are looking towards interest rates and thinking, gosh, how's this going to affect my affordability? But think about tenants. With all the inflation, gas prices, food prices, all that affects their lifestyle. So if you can show them a way to rent in your case, a brand new, beautiful property, that can be really attractive.
Absolutely. And at the end of the day, it's still cheaper for the tenant. We've looked at, some of these, comparisons to the national home builders, and, from a tenant's perspective, it's still cheaper to live in a rental home, than it is to buy a home today, which is an odd dynamic. And it's terribly hard to buy a home. I'll tell you just anecdotally, my wife and I are, buying a new home. And I'm in the real estate business in Jacksonville, Florida, and had a real estate agent friend give me a hookup on a deal that was coming up that was not even on the market yet. And it still went to highest and best before it hit the market.
Wow.
There's 4 people there looking at it the same day that we were. And and the tenants are experiencing the same thing. So even the ones that, even the ones that still think that they want to buy, they're still having a hard time buying houses because there's these bidding wars for the on-market deals. It's still a very interesting market out there today.
Well, and people are relocating to Florida. There's a lot of things to like about the jobs and diversity of industry and just all the things that are going on there. And, as you see these people coming in, a lot of renters, the folks that can buy, will buy. And this middle group we're talking about, maybe they're going to be more oriented towards renting, which is great for landlords. But what are you seeing in terms of demand for rental housing? You guys are in the property management business. You manage thousands of doors. What's happening on that side of the equation?
The demand is higher than it's ever been. So right now we're getting peak rental rates on all of our, every single model that we build. Last week was peak rental rate for each model individually.
Wow.
And it's really been the same every week. Every week something's ticking up. And when is that going to stop? I don't know. I mean, it's not sustainable to continue to grow rents the way that they're growing. We had one that we were looking at last week that was a 40-some% rent increase over the previous tenant.
Wow.
So it was a move out, new tenant moved in, and it was 42% higher. And we've been averaging over 20%, across the portfolio. So that to me is not sustainable. We're not giving pro formas for 20% rent growth. We think that it's going to start normalizing here within the next 12 months to some sort of normal rent growth rate. It's probably still going to be higher than, average growth rate, but 20%, it can't keep going up at that rate. But right now the rents are still going up. So we've been, fortunate to catch that wave. And I think as demand continues to increase with people piling into the state, we still have a major housing shortage. There's not enough lots being built. I know that some of the national home builders are looking at the market going, hey, do we need to be cautious, which may be causing them to build less spec homes, which is just causing more of an issue of supply for the housing market. So there's a lot of things going on that there's so much is changing all at the same time. It's really hard to keep a finger on the pulse, but that's the one meeting that I don't miss every week is the leasing meeting. Because that to me, that tells the story, across the board, at least for our business, because all we do is sell rental homes. We don't sell homes to retail home buyers at all. So all I'm concerned about is are people renting them. And it's really never been stronger, and the rents have never been higher.
Well, and you got to pay attention because these things can and do change. And one of the areas folks are concerned about, of course, is supply chain. And we've seen the costs of all the components of housing go up. Little bit of relief, perhaps. You can tell us how it looks on the ground there. But, Chris, people are concerned when they buy a new house, whether it's to live in or to primarily rent out, that these escalation clauses are in the contracts, and you totally understand why, right? You can't expect to sell a property at a price today if it's not going to be built for 6 months or a year and the pricing is going to go up. But you've had to deal with this, certainly, right? Building hundreds of new homes. How are you handling that part of it? The fact that the supply chain is tough and your prices are going up and passing that on to the buyer.
Yeah, unfortunately, we've had to do a lot of that. We've had to exercise those price escalation clauses. And it's been terrible. I mean, nobody wants it. We obviously don't want it. We don't want to hear it from our vendors. I'm hopeful that we're out of the woods on that. I will say, due to all this interest rate volatility, a lot of our clients have said, hey, we really want the house to be closer to done before we contract. And as a result, we're right now only selling homes that have a slab in the ground at a bare minimum and framing up. And what that allows us to do is actually dial in pricing. So our price escalation clauses had always historically been, once we're under construction, you're able to really figure out what that price is. So you're giving that escalation once construction has started. Well, now we're contracting after construction has already started. So it essentially makes the escalation conversation a moot point because we know what our cost is at that point. So, so it's kind of killed two birds with one stone. We're helping our clients, kind of get a better sight line into when they'll be closing so they don't have to worry as much about interest rate volatility. And then on the same type, they know what they're going to pay for the house when they contract it, not, worried about the supply costs going up and driving that price of that home up, at a later date. So, that's kind of one of the benefits that we've seen here from these interest rates.
That is a great solution. And I'm guessing not too many folks have the luxury of being able to do that, but it does a couple things. The certainty is the thing that can really entice a buyer to feel comfortable. It's when you sign what looks like a blank check. Now, in most of the escalation clauses, the buyer can still back out if they don't agree to the pricing, which makes it hard for the builder. But this sounds like a great solution. Now, in order to do that, that just means that I know you guys buy lots ahead and you own a lot of land. Are you just bringing the construction process further along before you sell the houses?
Correct. Yeah. We had to go back and have a lot of conversations with our banks and, get them to agree to allow more specs on our builder lines of credit. And, because banks don't love it when we start houses without it being sold.
Right.
But in this environment, a couple things have happened. Build for rent has really become a household term.
Yeah.
And, the lenders are hearing that. And the lenders really see build to rent as a low risk solution for them to still deploy capital in this market. Because if the house, for some reason doesn't sell, they know a tenant's going to go in it, rent it, and it'll be able to cover the cost of the build financing. The banks have really warmed up to build to rent a lot more than they ever had when we first started. I remember we did our first build to rent project. It was 2015 or 16. And they looked at me like I had three heads. Now it's kind of become the darling of Wall Street and a lot of the banking institutions. So fortunately for that reason, we've been able to start these specs. We still don't have as robust of a selection because we can't start as many houses as we have lots. We used to be able to give a lot more selection, and you could have a different model on you pick the lot, and now it really has to be something that started. So it brings the selection down significantly, but we still try to keep a little bit of everything going so that people have a nice selection to choose from.
Well, it is a very clever solution. And I think as people are looking at all the things that are happening, because everything is changing all the time, it's easy to get caught up on interest rates are high and neglect the fact that, well, so are rents, right? Rents are high, and you have to be careful about that. I like the fact that you guys are prudent enough to say, hey, we realize that rent escalation is not always going to be like it is right now. We love it when it happens, but we can't plan that on the future. At the same time, tenants are running out of choices. If they want to live in a great neighborhood, if they want to be close proximity to work and all that stuff, well, then they need to be thinking about how much they can allocate towards housing. When you buy a house, the lender tells you how much you can allocate towards housing. When you're renting a house, it really is up to the property manager. You guys look at their income and all of that to decide if it's a good bet. And when you have lots of tenants to choose from, that's a good thing. Talk about tenant-landlord law in Florida, because we have listeners in a lot of places and they may not understand that Florida is generally a fairly landlord-friendly state. But take us through that part of it, Chris.
Sure. Yeah. If Florida is very friendly from a landlord perspective. If in the event that there's an eviction, which is really where it matters, whether you're in a landlord-friendly state or not,
right?
It's relatively quick and painless to get a tenant removed. We're seeing 30 to 45 day evictions right now. That's not a big part of what we're seeing now either. Delinquencies are extremely low.
Yeah.
And they're extremely low because, folks can't easily go find another place to live. You can't say, well, I don't really love this place anymore. I'm just going to stop paying and then go find another place because there just aren't enough houses out there for people to lease. So I think that's, obviously driving some, historically low delinquencies as well. But to your point, when there is that, that rare eviction, we are able to remove the tenant in Florida very quickly. I will say, we do some work in Georgia, and that has become less landlord friendly in the past few years. I've not really been happy with the way that's been trending. But Florida's been staying strong.
Our guest today is Chris Funk from Southern Impression Homes and Suncoast Property Management. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from August 26th to 29th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 15 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful, the people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. Demand for offshore real estate has skyrocketed since the coronavirus shutdown, and with retirees looking for lifestyle, the work-from-home workforce able to be productive from afar, and tourism coming back strong, now may be the perfect time to consider Belize as a place to diversify risk in your investment portfolio. There's all types of opportunity in Belize when it comes to real estate investing, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and real estate contracts are in English. And at Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me in August in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on events where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, August 26th to 29th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under events, and I look forward to seeing you in beautiful Belize.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Hi, I'm Mark Victor Hans. You're listening to The Real Estate Guys. If you want to expand your consciousness, expand your wealth, expand your future, and have more delight and excite in your future than in your past, keep listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show today. Hey, join Russ and I in beautiful New Orleans, Louisiana for the 48th Annual New Orleans Investment Conference. We don't miss this thing. It's a ton of fun, very educational, world-class speakers, plus spending time in New Orleans. The food is fabulous. It's a great place, tons of music. Come on out and join us. And we'd also love to have you join us for the Real Estate Guys party during the event. To get all the details, all you have to do is send an email to New Orleans at realestateguysradio.com. New Orleans at realestateguysradio.com. We're talking today about the Florida markets and build to rent and all kinds of things with Chris Funk. Before we get back to that interview, it's time to play real estate trivia, which has something to do with one of the hot markets in Florida. As soon as you hear the question and think you know the answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address, because the first person that gets it right is going to get an awesome book called Success Habits of Super Achievers. Lessons from Les Brown, Brian Tracy, Mark Victor Hansen, Phil Collin, Kyle Wilson, and more. That could be yours. If you know today's real estate trivia question, last week we brought you part 1 of the 2022 Investor Summit. We'll bring you part 2 in a few weeks. You're not going to want to miss that. Here was our question. Name any of the 3 ports that we visited on the 5th annual Investor Summit at Sea. Kind of a hard question. It took a lot of guessing, but here are the answers, and it only took 1 to win. Belize, Costa Maya, and Grand Cayman. For 18 years, the Investor Summit was on sea. In the last couple of years, it's been on sand. Stay tuned to find out what the future holds. Here's our real estate trivia question for this week. Ocala, Florida is known as the horse capital of the world. When was it officially named that? Yeah, how long has Ocala been the horse capital of the world? If you know or just want to take a guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Send us your best guess, plus your name and mailing address, so that if you're the winner, we can send you Success Habits of Super Achievers. That's today's real estate trivia question. We're talking with Chris Funk, and Chris, you guys wear 2 major hats. Your property management company is extraordinary. Having a chance to come visit your office, meet with your team, just really extraordinary folks. I was surprised and amazed in a very good way of just how friendly people are when they're dealing with tenants who have issues and problems and all that. So that's a big part of what you guys do. But then, if folks haven't heard your story, right, you realized that taking older houses and fixing them up came with a lot of headaches and problems and uncertainty, and you've really shifted now into building brand new product, which is awesome. A year ago, we came out and we did a big field trip, had a busload of folks that tooled around, and we're going to do that again coming up very soon, so we're excited about that. Tell us about, what's happening in Jacksonville, and then let's shift gears and talk about some of the other markets.
Well, Jacksonville itself just continues to sprawl, and it's, really taken hold, for lack of a better. 5 years ago, Jacksonville wasn't on any radar screen, and it's slowly starting to get noticed. And it's not fully hit the mainstream yet, but it's obviously very close. We've had a lot of people starting to put some major dollars into this city. Shad Khan, who owns the Jacksonville Jaguars, has a huge downtown redevelopment project, and a lot of it just got approved recently. Like, we've got a new 4 Seasons coming to Jacksonville, so that's going to be great. We needed a good hotel here, and that wasn't at the beach,
right?
and and then FIS is building their brand new headquarters here, which is a massive project right on the river. They're building a beautiful new office building. So we've got a lot of fintech in this market. A lot of financial institution, huge area for medical. So we've got MD Anderson's, Wolfson's, Nemours, Baptist. I mean, it's a major. We've got Mayo Clinic. Just you name all of the big medical providers, and they're here in Jacksonville. It's one of the best cities for medical care in the country. On top of all of that, you've got the military bases. We've got NAS Jax and Mayport, so we've got 2 military bases, and then all the distribution that's going on. So we've got the Amazons of the world, Coach's worldwide distribution centers here. You just name it. Just keep rattling them off. We've got just a whole covey of these folks out there on the west side that are just continue to build these distribution centers, which provide a ton of jobs. Jacksonville is really spreading out, even more west than it had before, to the point that we're even having a hard time finding land deals in Jacksonville, and we're even looking at the next county over, which is where the growth is. Obviously, the path of growth is going. So we've still got a bunch of projects that we purchased over the last few years that are in development. So we're building, everybody loves our quadruplex product, and we've got 6 or 7 quad subdivisions going on right now. Again, nobody knows about them because we're not selling anything until it's past slab anymore. So, keeping the cards close to ourselves. But yeah, so the population and the job growth, continues to go hand in hand with it. And, we're seeing, we talked about, gains in rental rates, and we talked about, house prices. Well, the biggest thing that we're seeing is we're also seeing incomes go up for folks. So, the income for families in Jacksonville and really most of Florida that we've seen in the applications that are coming in are rising. So it's, obviously it has to come from somewhere, right? So,
well, it's kind of a double whammy. You've got jobs increasing, and those are the good kind of jobs where wages do go up, and that's awesome. But you also have folks that recognize, compared to what Jacksonville offers, a great lifestyle for maybe less than they were paying in other marketplaces. So that's why you guys, I think, are the recipient of a lot of folks coming in as well. Now, last time we were there, we spent a day up in Jacksonville and the surrounding area, and then we got on the bus and went down to Ocala, Florida. I had not been down there, and it blew my mind. Take us through why Ocala has become such a big deal.
Well, man, if Jacksonville hadn't been discovered, Ocala definitely hadn't been discovered. We started in Ocala in probably 2017. And we built our first houses there. It was really a test pilot for us. We said, man, is this going to work? We'll just do a few and see. And oh my gosh, the demand was through the roof.
Yeah.
Because nobody'd been paying attention to them. And the product just flew off the shelves. The tenants just absorbed it as fast as we could build it. And we've just been super fortunate and just continued in that market ever since. And the market's continued to grow. And again, you talk about some big folks putting some big dollars in there. Roberts Trucking, so the R&L carriers, they're home based there out of Ocala, and I mean they just put in. Ocala is, by the way, the horse capital of the United States. But Ocala and Lexington, Kentucky, they dispute which one's the capital. So, but both of them are primarily horse country, and R&L Trucking just put in over $1 billion equestrian center, very close to the town center of Ocala, and continues to do some very large, expensive, high-end products, developments around the area, which of course is not what we do, but we'd love to see it because it means that there's a lot of money flowing into that market. And again, there's a lot of jobs that are flowing in. So, they're very big on distribution there as well. And they've been very pro-business. Obviously, the farmers and the horse people aren't in love with all the businesses that are popping up all over Ocala, but they are, and they continue to be. And we really are seeing a steady flow of people flowing into that market. And even the areas that we build there, a lot of these lots were platted a lot of years ago. They're bigger lots, they're big lots. They're in wooded neighborhoods. They feel a little bit more mature. They give a little bit more of a rural feel. So, we see folks that are coming out of New York and, they may go look at Jacksonville and they may go look at Ocala. And the ones that still want a little bit of a city life are going to pick Jacksonville. And the ones that say, hey, I'd rather see some trees, more trees and some horses. They're going to Ocala, and it is just exploding down there.
It is so beautiful. I was taken back by just exactly what you just described. It doesn't feel like a big city, even though it's growing by leaps and bounds. And then you have this big infrastructure coming in. The equestrian center just blew my mind. I mean,
right?
it kind of rolls off the tongue. It's $1 billion. But when you go see what $1 billion buys in Ocala, so impressive. And that brings in seasonal business, which is great for the local economy, as well as the employees that come and service all kinds of the folks who are coming to stay, and the businesses that are popping up everywhere. It's really vibrant. It's hard to get ahead of a market. That's the thing. Like when a market is proven, it's like, well, yeah, but now pricing is up, and you guys got in definitely well above the curve. I would almost say it's probably still ahead of the curve a little bit in Ocala.
I would agree. I think they're, as much as it's growing, they're starting to have a hard time keeping up with it. We went there to the World Equestrian Center. My wife rides horses, and we went there for a weekend, and we went to go, we used to live there, and we went to go out to one of our old haunts that we used to love to go to dinner at, and we couldn't get in. It couldn't get in the whole weekend, and we couldn't find a table. So many people have shown up that it's really, even just the services and the amenities. The restaurants are having a hard time keeping up, which is great to see. I love to see the restaurateurs doing great, but it's going to drive more people, more business to there. Because there really is just an amazing demand that isn't being fulfilled. And I think that's really in all sectors. We're trying to solve the housing sector, but there's a lot of restaurant groups that are coming to town. Everybody, everything's got to show up there. And schools, they're having to build schools like crazy. We just actually got denied our first rezoning last night.
Wow.
In Ocala, which was the first one. They just said the schools can't handle it in that particular area that we were in. So we're happy that we have such a large land position there, because getting new things approved is, might start to get difficult because of, all the people that are flowing in.
Well, Chris, this is one of the things I appreciate about your operation is you play the long game, and rather than have to buy a piece of land, build a house, and once it's sold, go out and look for another piece of land. You guys are literally years ahead of the game, which is great to see. Last time on the trip, you took us by some of the projects that were under construction, and then some of the areas that you hadn't even started yet. Hey, we've got land over there, we've got land over there, which is what you need to do to be able to bring in properties at a price that makes sense for the tenants and therefore the owners, right? So that's critically important. What are the things you're seeing in terms of the pricing? Folks that maybe aren't familiar with what units cost in an area. You guys build single family, you build up to 4 units and even bigger than that. But just give us kind of the range, if you will, of what investment property costs in these parts of the world.
Sure. So, it's obviously gone up some due to all these material cost increases, but, we're still able to produce some houses in the, in the high 200s, some in kind of the mid to high 200s on a single family basis, up to 400,000. So that's kind of where our single family caps out. So call it 250 to 400.
Okay.
And then we build a duplex product. I think right now probably our kind of our lowest price point on a duplex is probably somewhere around 450, and the highest is probably somewhere around 650. Depending on whether it's a 2-bedroom, 3-bedroom. A quadruplex is really just depends on where they are, but they're really 700 to $1 million at this point. And then to really everything in between. So 250 to $1 million is, I guess, our sweet spot. It's a wide sweet spot, but that's where it is.
Yep, pretty wide. And of course, there's good financing on those as well. If you're interested in the market, then what you ought to do is come on out to the Jacksonville Ocala field trip. We're going to spend 4 days in this beautiful part of the country. And Chris, your team did such a good job last time, just really educating us about all aspects of it, from maintenance to property management to leasing to construction. It's a really thorough trip. I think even if folks aren't convinced about Florida, they're going to learn something about investment real estate on the trip. But we're excited to come out and see you guys. It's the second weekend of August, Thursday through Sunday. You can get all the details on our website at realestateguysradio.com under events. Chris has also put together a great report on the Jacksonville market. And if you'd like to get a copy of that, just send an email to jacksonville@realestateguysradio.com, jacksonville@realestateguysradio.com. Not only will you get the report, but you'll also get the details on the field trip. Well, it's been great catching up. It sounds like the market is still strong as ever, and we appreciate your time today and look forward to seeing you in a few weeks.
Looking forward to seeing you, my friend. We'll see you down here in Florida.
There's Chris Funk. When we come back, you're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
As real estate investors, it's no secret that the real estate guys love Florida, and the Sunshine State continues to receive more than its fair share of businesses and population relocating from the Northeast, which has created a huge opportunity for real estate investors. So come join Russ and me in mid-August for our Jacksonville Palm Coast Ocala field trip. On this highly interactive trip, you'll get an up-close, hands-on, personal experience you'd be hard-pressed to find elsewhere. You'll feel the vibrancy of the markets, observe the quality of the infrastructure, and truly get a sense for the demographics, all things you just can't do by simply searching online. Plus, we'll introduce you to our Boots on the Ground team, and you'll meet some amazing investors from all over. To reserve your spot, go to realestateguysradio.com and click Events, where you'll find the Jacksonville Field Trip. There's a big difference between researching a market from afar and seeing it with your own eyes. So join the Real Estate Guys as we explore not one, but 3 amazing real estate markets. Go to realestateguysradio.com and click Events for the Jacksonville Palm Coast Ocala Field Trip. See you there.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a U-bit time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill U-bit, and help you pay way less taxes. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to eqrp@realestateguysradio.com today.
In uncertain times like this, it's great to know there are 2 things you can always count on: high demand for affordable single-family homes to live in, and Terry Kerr's amazing Memphis team at Mid-South Home Buyers to find, fix, and manage the next addition to your recession-resistant real estate portfolio. The Memphis market is logistics and distribution dynamo with an economic engine that's essential to moving goods and critical supplies all over the United States. Quality rehab, proven profitable property management, affordable rents, and solid ROI make turnkey property investing through Terry's team a dream when it matters most. To learn more about Memphis and Mid-South Home Buyers, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hello, I'm Brian Tracy, and I'm here today with Robert Helms. He's one of the real estate guys, and he always has wonderful ideas to share with you that can improve your life, improve your income, and help you to achieve more than you ever thought possible.
And welcome back to the Real Estate Guys radio program. Hey, if you ever wanted to do bigger deals using other people's money, or if you want to passively invest alongside awesome folks, coming out to the Secrets of Successful Syndication. It's our 2-day workshop that happens twice a year, and the next one is right around the corner. You can get all the details by sending an email to syndication@realestateguysradio.com, or go to the website at realestateguysradio.com and click on the button that says Events. My goodness, what a whirlwind of information from Chris Funk.
Yes, it's always fun to talk with someone who is very active in the marketplace, and not just in the marketplace, Florida in general, and multiple cities in Florida, but in the build-to-rent space, which is especially interesting because it's been one of the hottest niches, affordable housing. And there are things going on in that niche right now that people need to be paying attention to. And I love having conversation online and offline with Chris and his team because they really do have their thumb on the pulse of what's going on. One of the things that he talked about was the impact of the huge run-up in interest rates. And of course, that's abated a little bit right now, but it is having an effect. And you combine that with inflation, not just rent inflation, but labor inflation, commodity or cost of materials inflation, an increase in regulation, which is a switch from the way it was under the previous administration. And then the way taxes are beginning to be rattled around and changed. So people that have to take long views, like people who are buying tracts of land and are building hundreds of houses and are thinking about selling something today and not really delivering it until maybe 6 months, they have to take into account a lot more carry risk. And it's beginning to affect their decisions. And ironically, it may affect their ability to take those risks. Or in other words, it could cause a decrease in available stock. And so one of the reasons this is so interesting is I have this conversation all the time with people because they say, gosh, I hear all this talk about how real estate prices are going to come. Blackstone is, building a big fund, vulture fund. They're expecting a big crash in real estate prices. Should I buy? Should I not buy? And my thing is, well, if real estate prices crash, typically it's because credit markets have collapsed or interest rates have taken off, meaning either credit is not available or it is very expensive. So if you have an opportunity to tap into relatively affordable credit markets today, is that a good move or a bad move? If people people are not, like Chris, are not going to be able to build as much or with as much confidence if they're going to peel back. Is that going to create scarcity or abundance in the future? Probably scarcity. So if interest rates go up and you have a loan, you'll be glad you have a loan. If interest rates stay the same and the numbers work, then no harm, no foul. If interest rates go down, then your equity will probably go up and you can refinance. Here's the thing. If inflation happens and you don't have any good debt on real estate, that's a scarce resource, you're probably not in a position to make any money. So I know there's a big attitude right now to take a wait and see attitude, but if you have a deal in front of you in a market that makes sense with a good team and numbers that make sense and you can lock in good financing, I still think there's a lot of opportunity in this market. It's one of the reasons I'm so excited to go back to Jacksonville and spend time with Chris and company because they have inventory.
We say that think and do is better than wait and see. Almost every single time. It doesn't mean you have to jump in, but it means that if you take measured risk, sometimes you can do extremely well. It's a lot to talk about, so let's spend 4 days doing it. Come on out with the Real Estate Guys. We're going to hang out in Jacksonville, Ocala, and several other markets. A bigger trip than we've done in the past. Our field trips have typically been coming on a Friday night, drive around all day long in the bus on Saturday, and a half day in the classroom on Sunday. We're adding a day to that. So we're going to come in on Thursday. We're going to spend 2 days looking at all kinds of different, not just real estate, but markets, the drivers, the employers, the things that affect housing in the short and long term. And we'll have a great time. If you'd like more information and you'd like Chris's report on Jacksonville, Florida, all you have to do is send an email to jacksonville@realestateguysradio.com, jacksonville@realestateguysradio.com. It'll also give you the details about the upcoming field trip. It's filling up nicely, but there's still room for you if you'll hurry. It's going to be a fun time. We'll hope to see you in Florida. Big thanks to Chris Funk for sharing his time with us today. Next week, we're going to talk about the short-term rental market and what changes are happening there. We've got an awesome guest. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers, low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct, asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.